Welcome to the Weekly Dividend Recap for the week of February 24th, 2023. I'm Nick, host of the Dividend Growth Income channel. The Weekly Dividend Recap is a weekly news video series put out on Friday evenings to briefly sum up some of the latest news around your favorite dividend-paying stocks, and also to share some thoughts of where we see the market at this point in time. If this is something you enjoy, please consider liking and subscribing to help us out with the algorithm to spread the amazingness that is dividend growth investing. And folks, I'm just a regular guy, I'm not a financial advisor, I just like talking about dividend stocks. This series should not be taken as financial advice, alright? So let's get into it. It's been one heck of a week in the market. The S&P 500 is down 2.63%. SCHD is trading at $74.86, down 1.77% over the last week. And we're now below $75 for the first time in 2023 for this fine ETF. Now here are the top 10 stocks in SCHD as it stands today. Feel free to pause if you need to. And let me know down in the comments what dividend stocks are on your radar for the next week. First, we have to talk about this Intel slashing its dividend by 65%. Can't say I didn't warn you guys. I did put out a video earlier this month warning there was a very good chance that a dividend cut or reduction was happening with Intel. I did not expect it would happen quite this quickly, but it's the right decision by management who have a lot of work to do to turn things around for this beaten down tech giant. Intel is cutting costs across the board. This was inevitable. Going forward, shares of Intel are yielding just under 2%, which makes it look way more like a tech or semiconductor stock than when it was yielding 5%. The big question is, will this dividend cut help form a bottom in this stock finally? I mean, it's down so hard over the last 5 years. I know a lot of you are investors and still believe in this one for the long term, so we'll keep covering it and hope to see a turnaround in the next few quarters. Another company in some turmoil is Medical Properties Trust, ticker MPW, down over 18% just in the last week. This is a REIT in the medical space. MPW's third largest tenant, Prospect Medical Holdings, may not be paying their rent this year. Simply Safe Dividends has downgraded their safety score from 60 to 50, suggesting this dividend is getting riskier. This company has been a major dog in the market, and this 11% yield is becoming more sus. Be careful. Dividend cuts are depressing, so let's talk about companies that did raise their dividend this week. Home improvement retailer Home Depot, ticker HD, announced a 10% dividend raise earlier in the week for their 14th consecutive annual increase. This channel is a huge fan of Home Depot stock. We do own some in our public portfolio. Their earnings report was not so hot, but their long-term outlook remains optimistic as the largest home improvement retailer in the world. Super retailer Walmart, ticker WMT, gained its crown as a dividend king on February 21st when they announced a 1.8% raise, marking their 50th consecutive year of dividend growth. Walmart strikes me as a company that's going to do well in an inflationary environment such as our current situation. We have one more retailer we want to highlight today, and that's TJX. Companies known for their TJ Maxx, Marshalls, and home goods stores. They just announced a 13% dividend raise on February 22nd. This is a company that has done very well, aside from that fluke year in 2020 when they had to cut their dividend due to the consequences of the pandemic on their business. But even with that dividend cut, they're still growing their dividend at a rate of 15% on average over the last 5 years. Another dividend king announcing its 67th consecutive dividend hike is Genuine Parts, ticker GPC. They're a global auto parts distributor. They raised their dividend by a respectable 6.1% this time. You'll want to have your shares by March 2nd for their next dividend payment on April 3rd. Taking a quick look at it though, I think this is an overvalued stock by just about every metric I look at, but 67 years of dividend growth is quite impressive, don't you think? Our next dividend raise is a regional bank, M&T Bank, ticker MTB. They're a regional bank out of Buffalo, New York. On February 22nd, they announced they're raising their dividend by 8.3% for their 7th consecutive dividend raise. And that's also 34 years without cutting their dividend. The dividend has been growing at a rate of 10% annually over the last 5 years. I think this one deserves a place on your watch list. Regional banks can make for awesome dividend investments. Two more raises I want to cover in the REIT space real quick. Prologis, ticker PLD, announced a 10% dividend raise there in the industrial space with attractive dividend growth. And Essex Property Trust, ticker ESS, this is a residential REIT in the western United States. They hiked their dividend by 5% for their 29th consecutive raise. All right, let's take a look at the week ahead. A lot of popular dividend-paying companies have their ex-dividend date this week. You want to have your shares before this date to collect their next dividend payment. So on Monday, February 27th, two of the major railroads have their ex-dividend date, UNP and CSX. On Tuesday is the ex-dividend date for McDonald's, which will be paying $1.52 per share on March 15th. It's also the date for Lockheed Martin, Realty Income, Wendy's, and Tyson Foods. On Wednesday, semiconductor company Qualcomm has its ex-dividend date, and they'll be paying out 75 cents on March 23rd. Thursday, March 2nd is the ex-dividend date for a good list such as Pepsi, Bank of America, Flowers Foods, and Dominion Energy, among others. And on Friday, apparel company Nike has its ex-dividend paying out 34 cents on April 3rd. Looking into the week ahead, I am focused on two particular industries. The first is healthcare, particularly the pharmaceuticals. I think there is a lot of value in that sector right now. And the other are the railroads. I continue to think investing in this industry is a no-brainer given the efficiency in which they move large amounts of cargo and the moats these companies have. Companies like Union Pacific and CSX. The unfortunate incident in Ohio earlier in the month by Norfolk Southern, combined with ongoing labor issues, have created what I think are appealing long-term opportunities. Now, we'll be releasing a video in the next couple days covering the stocks I think will be the best opportunities for long-term dividend growth investors in the month of March. Be on the lookout for that. This is the Weekly Dividend Recap, Episode 1 for Week 8 of 2023, brought to you on the Dividend Growth Income channel. If you found value and want us to be able to continue this series, if you could, just please do all of the things that help us grow our show and channel. And have a wonderful weekend, my friends.